Hi, my name is Christopher Lester, and I'm a chartered financial consultant, which is like a CPA in financial planning. I'm also a retirement income certified planner and a certified college planner, which is why you may be here today to learn about and understand 529s. With almost 30 years in business, I've had quite a few families come through the doors, and quite often they've saved in 529s. And little did they know the impact that these savings accounts could have on their financial aid from a college. So to understand a 529, you have to understand their intent. And back in 1996, when they created this section of the IRS code, it was to allow families to save money in a place where the earnings that are saved as well, so the gains, would grow tax-free. And then if those funds were used to pay for qualified higher education expenses, not only the money that you put in, but the gains was all tax-free. Sounds wonderful, doesn't it? Well, that's not necessarily the whole story. And what you have to understand is how these colleges calculate the amount of funds or awards that they will offer families. Some of it's based on what they call federal methodology. And so if a student applies to a state school, those resources that are saved in a 529 are assessed at 5.64%. So let me use some math to paint a picture. Let's say that over the years you've put about $100,000 or accumulated $100,000 into a 529, and you approach a state school. Well, this has to be reported on a FAFSA. That's a federal application for free student aid. And when you put that money on the form, the colleges will now give you a $20,000 exemption, and the rest of that is now assessed as a parental asset, and that's 5.64% against the remaining $80,000. So for about $4,000 of aid you might not have otherwise gotten because of the environment that you've saved your college planning for your student. Well, you couple that with what they call the institutional methodology. Well, the institutional methodologies, these are, there's about 200 or 300 of these colleges that use what is called the CSS profile form. And these forms calculate pretty much any way that the college wants to. Usually, a 529 is considered a resource of the student and therefore is assessed at a higher level, as much as 20 or 25%. So in that same example where you saved $100,000 in a 529 and now you report this on an institutional form, there could be $20,000 or $25,000 that you're not getting in aid or relief from the college, and that could be a mistake. So in working with the certified college planner, you can learn how to navigate this arena. And the other component is some tax law changes that have happened of late. In 2017, Congress enacted the TCJA, the Tax Cut and Jobs Act, which now allows families to use monies that have been saved in a 529, up to $10,000 per year, to be used for K through 12 expenses for education. And remember I said earlier that before, in college, they could only be used as qualified higher education expenses, room and board, tuition, expenses like books or computers. Those are the types of expenses that are still included in this, tax change. So now, one of the issues I will hear is that parents will quite often say, hey, my mom and dad have saved money, and they've saved money in our student's name in a 529. And whether that's because they wanted to put money away because they got financial advice to do so, or they were doing some estate planning and were able to front load the 529. this can be a little tricky because separating and telling a parent, I have parents too. My dad has since passed, but I have parents too. My mom. So trying to tell my mom what to do with her money is very difficult. However, helping your grandparents to time how they distribute money out of a 529 could be really important. So if they try and put that money and pay the tuition in the first year of school, that could be problematic because it could, again, reduce the amount of aid that a college might give. Yet if they wait until and time it in their junior year of the student's college years, they may be able to start to use those funds in a way where they're paying the tuition and having the money not count against them. There's a lot of strategies that can be implemented. And again, dealing with somebody that's knowledgeable in the college financial arena to help you to pay for college without going broke can be in your best interest. My name's Chris Lester, Chartered Financial Consultant, Retirement Income Certified Planner, and Certified College Planner, here from Somerset, New Jersey. Wish you to have a great day and look forward to speaking with you soon. Bye-bye.